Now we look elsewhere to see, okay, we look at credit default swaps. Yes, they've come in. They peaked in late September at 113 basis point. That compares to 150 during the depths of COVID, when the bets on bankruptcies were quite significant. And today we're down to 75, but still elevated from the 50 to 60 range where we were pre-COVID. High yield spreads. So in the high yield space, these are lower quality companies, more risky. In order to attract capital, they have to pay higher interest rates. And so today, we have been trading in the 5 to 6% range, really since mid last year. Pre-COVID, that did drop to 4.4. So people were feeling a little bit better about everything. Nothing had broken, and then something broke. And we went back into that 5 to 6% range, which is higher than we were pre-COVID in the 3 to 4% range. Commodities are all still, many of them are down from their peaks. Lumber down 76%. DRAM prices in the semiconductor space down 66%. Oil down 34%, iron ore down 34%, copper down 16%, silver down 11%, gold down 1% from their peaks. And all of them, except for gold, are down on a year-over-year basis. So again, in the pipeline, we've got deflation. Currencies, more signals there. Just to give you a sense of how wild the dollar has been, on January 8th of 21, the dollar was at 89. DXY is the trade-weighted dollar. So it's the dollar measured against other currencies according to trade weights, are trading with them. It went up 29% to September 30th of last year, 29%. And interestingly, what happened soon thereafter, that was the peak, and soon thereafter, the bond yield peaked. And, it's interesting to make these connections. Now, the bond has dropped, the dollar, DXY, has dropped 13% since September 30th, but is flat on a year-over-year basis. So what that tells me is that the risks associated with the dollar going up 29% were highly deflationary. We're hurting the rest of the world, and the dollar going down has given them some relief. I think the most remarkable of all the indicators that we monitor was Bitcoin during the crisis. Now, it typically acts like a risk off. It tends to do poorly during risk off periods. This time it did the opposite. From March 10th, when it bottomed at 19,500, it has soared 55% to $30,270. Ether has gone up 51% from 1370 to 2076. So these previously volatile, risk-on metrics are acting like flight to safety. Well, we think this is a theme that you should be watching out for. We think a lot of innovations out there are going to be the flight to safety. Why? Because they're going to disrupt the traditional world order.